afternoon, everyone, and happy Friday. You have Alyssa Corum here and Ed Carson. And on today's show, it's Friday, so we're going to go a little bit more in depth on the market action this week, take a look at some technical metrics, and we're going to break down the action for two compelling stocks. Ed, so why don't you go ahead and kick us off? We had a really strong close today. The NASDAQ finishing down about 0.2%, so coming well off of the lows here. What does the bar on that candlestick, what does that tell us about how we closed today?
Well, it tells you that, we closed near the high of the range. It was definitely positive. That's why we have this sort of blue bar, even though we were down. On a traditional chart, it would show like it's still a down day, but we closed up at the high of the range. Nice close. Overall, we had this nasty sell-off for a day on Wednesday and started that way on Thursday morning, but then we sort of found support.
Yeah, and Ed, I mean, the whole point of these regression channel lines that we have is to show key moments. And it looks like earlier this week, there was a pretty key moment that coincided with that regression line.
Yeah, we reset it back when we had the November 4th, follow through day, the day after the election. And you can see, a couple of times when we've come up to the main regression line, it's hitting resistance. And obviously that's also, you can just look also how it's doing versus the 50-day line. We were starting to get maybe close to a little extended. So those are things to keep in mind. So this was probably positive action for the week. I mean, when you really think about it, we were getting not extended, but we were getting close to it. And the euphoria, a lot of measures, the bulls versus bears reading, those were things suggesting, well, that people were getting a little too excited. So this week's action, is fairly positive. And, I think what we want to look for is holding above this line. This is the 21-day moving average. It'd be nice to see if the major indexes could continue to do that.
Yeah, because when we saw that very powerful market earlier this year after the coronavirus crash and that power trend, we were seeing a lot of those reversals at the 21-day, and the NASDAQ really, for the most part, respecting that level for a long time. We're in a very different market now, but I completely agree. The 21-day, a very key level to keep an eye on. And now let's head on over to the weekly chart. What are you seeing this week? I mean, we had a couple of up weeks in a row, and again, this is just a different view of showing maybe a little bit of resistance now at that regression line.
And a little bit of resistance there. And also just, you can see it's not a big move ultimately. It was, we had a little bit of a decline after a couple of solid weeks. And just look at this, ever since we've had the March crash, it's been a pretty steep ascent. I mean, yeah, there's been these actions here, but overall the stock market has had a really strong 8 months or so. I mean, it's pretty impressive how well it's done. So keep that in mind as we get towards the end of the year. But, right now, the market rally still looks pretty strong, and this was probably a healthy action so far today.
Yeah, constructive week. So you think that the Santa Claus rally could continue based on what we saw this week? No real big red flags?
Every once in a while, the children need to get a lump of coal just so they don't get too complaining and just too demanding. And so a little tiny lump of coal, still lots of cookies for investors perhaps down the road.
Good. All right. Well, now let's flip on over to the S&P 500 on MarketSmith, and the S&P closed off of session lows today as well, down just fractionally, about 0.1% for the day, and it too looking like so far it's respecting the 21-day as well.
Yeah, and so that's just a nice action there. Again, all the major indexes had modest losses, but they've all been running up, and it doesn't really look out of character. When you look at any of these charts, it's like, well, this all looks fairly normal. The major indexes, the leading stocks generally did well. Some high flyers pulled back, but generally too, moving averages like the 10-day line or the 21-day. And there's always going to be exceptions, but generally the market action has been positive overall.
All right, well, let's analyze a couple of individual stocks. Starting off with Tempur Sealy, ticker there is TPX. Saw a gain of about 3% today, Ed, after some really nice tight action from Tempur Sealy and support at its own 21-day line.
Yeah, nice action here on the 21-day line, and it broke above a 3 weeks tight. I'll move over to a weekly chart in a little bit. which is where it was actually that it's like, the earnings growth has rebounded. People are sprucing up their homes. We're seeing that with a lot of stocks. I know you had brought up, on IBD Live, Floor and Decor. We've talked about a lot of stocks in that area. People aren't going on vacation. Maybe they're spending money on TVs, they're spending money on nice furniture, they're spending money on a mattress. And so, this is all, it's a nice sector to be in. This is one that has some up and downs, but it does have good runs here and there. So
Yeah.
that was a nice.
So, yeah, presenting an actionable opportunity today and some really nice tight action, which is pretty bullish to see after you see a stock breaking out of a base there. It had a little bit of trouble on the daily chart. If you look at how it, initially failed out of that flat base, but quickly rebounded and then traded nice and tight before this move here today.
Yeah. So,
all right. Nice. And next, Ed, let's check in on IIPR. What stands out to you about this chart?
Well, a few things. One, this is a 3 weeks tight, and I guess I'll go right to a weekly on this. So technically, the buy point was from this area is right above here. I'm going to go back to a daily, though, for a couple of reasons, because you probably could have already bought it, as it broke a downtrend line like here, or got above this level here. So, it was already actionable. And also, this is now 24 days into a flat base, which means one more day, and we will have a flat base with this entry. So it's always nice to see. Tight entries are a little bit like a little ledge on a mountain cliff. It's nice to have a base. If you're gonna, you don't want to. It's just a little bit more solid situation, more likely to work. So that would be a positive. This is a profitable pot stock, and you can look. These are enormous numbers. I mean, pot stocks are coming back, but it's nice to have one that actually has good fundamentals.
Yeah, I was going to point that out as well. And even if you go back to before the coronavirus crash, IIPR was one of the standouts in that pot group. While a lot of those stocks had that maybe initial big run, like a Tilray, for example, and then really got bogged down for quite a while, IIPR has shown in the past that it can go on big runs as well. So we'll see what develops from this with a relative strength line that is continuing higher and the stock at new highs. So thank you so much for sharing both of those ideas, Ed. And as we wrap up, I want to get your thoughts on what investors should be thinking about for the week ahead. We're getting awfully close towards the end of the year. This is something that we've been talking about on IBD Live, thinking ahead to next year, but we still have a couple of weeks. But more immediately, what should investors be doing based on the action in the overall market that we saw this week? A pretty scary day there in the middle. By the way, what should they be thinking about this weekend?
Pretty scary day in the middle, then an extra 5 minutes made it not much fun to open Thursday.
Yeah.
But, just check out your stocks, make sure that see if any of them had serious damage. A few did, and a few of them might be saying, well, wait a second, should I be taking at least partial profits in some of these big winners because some of them have come down? And really make a game plan. Try to think about, well, if the stock does this, I'll sell a third, or I'll sell this, or this is my line in the sand, I'm going to sell all of it once it gets here. I mean, because if these rules don't always work. You're going to have a stock. I just sold a stock this week where the stock immediately rebounded. But the thing is, you're not trying, obviously stock markets aren't always going to do exactly what the rules say, but what you want to do is develop rules to see that work over time, most of the time, so you don't get caught in a stock that goes down 80% or watch an 80% winner turn into a loser, so not only make these rules, but print them out and see how they did. And so when you can go back, when you do a post-mortem, you can see, well, did these rules work? Or would I have been better if I'd followed this and this and this? So those are the kind of things you can work right now, but also as you think about for like a look back for 2020 on your trades.
Yeah, fantastic. Thanks so much for sharing that, Ed. Make sure you're checking out IBD Live on Monday for a continuation of this discussion. We really appreciate you tuning in. And also, we do have an exciting webinar coming up on Tuesday with Mark Minervini and David Ryan, two investing champions. You can check out all the details on that over at investors.com/webinar. Just yet another outlet for you to get some more educational resources. Thanks for tuning in, everyone. We hope you have a fantastic weekend. We'll see you back here Monday.